Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Tuesday, November 1st. 7 days to go before the election, and there's certainly more landmines that we have to cover before we even get to that point. So are we going to see this market sell off before the election, or we're going to see it rally before the election, or are we going to see it hold its breath until next Tuesday night when the election returns start to come in, and then I can figure out what it wants to do? Well, I think we're probably going to get the move before we get to the election. Now, I've seen it both ways. I've seen it where we've seen certainty coming into the election well before, and we've seen rally from that. And today has been sort of the other side of that coin, where we've started to see some weakness coming in, and this weakness has been coming in for the better part of a week now, and is starting to accelerate to the downside. Now, it's easy to get carried away when we're down 16 handles, and we really haven't seen much of any kind of red candles this size for a while. We've seen the smallest volatility really in years, in decades almost, right? So we're not used to seeing price that moves actually. So just to put things into context, I mean, today's move is almost like, we dropped one floor here. If we look at the monthly chart of the S&P here, it's almost like we dropped one floor on the Burj Khalifa. It's barely even recognizable when you look at the entire, vertical rally here that we've had. So dropping 16 handles is really no big deal. It's just the direction people are not used to. And believe me, if we start to get some real selling, we could get into one of these types of moves where it's truly a waterfall decline. And that would certainly get the market moving again. It's been in this funk now for the past 2 to 3 months, and it's really testing the patience of just about everybody. Now, before I said that, I've seen markets rally into the election when certainty has come into the election. And the last time that I recall seeing something like that occur was all the way back here in 2004. So if we zoom in on this time frame here and look at the last, kind of like the last quarter of 2004, we can see that we had a pretty stout rally here, which started right around the end of October and rallied into and past the election. As it became pretty obvious near the end of October as to who was going to carry the election and how it was going to turn out was quite evident to the market at this point by the end of October. Okay, so that was back then. What is now? So let's go back to now, and you can see that we've really had kind of the opposite effect on the market. We've seen nothing but uncertainty, 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 number one. But number two, the dips are being bought. This is what's so maddening about this market is nobody's buying the highs up here. Nobody's buying the highs, nobody's buying the highs, but the dips are being bought all the way along. And once again, we had the dip being bought today. Now, there's a reason for that, at least from a technical perspective. If we zoom out here and look at, let's say the last 1.5 to 2 years of the price action here, since we've really been in the same area. So last couple of years, and if I add this study, which is called volume profiles, so I'm going to go here and add studies, and I'm going to look for the V's volume profile. Now I'm going to just zoom in on this last 2 years that we've been trading here. So ignoring all the price action before that, and you can see the importance of where the price stopped today. So we've got this histogram of price based on the volume, and you can see that the peak of this is right around where the price stopped today, which is right around 2088 on the ES. And again, that's a little bit different from the cash S&P. But what this is saying is that a lot of volume has been trading in this area over the last 2 years, around in here, and it's really peaked around in this area over the last 2 years. Again, the highs were not bought. The highs were not bought all the way along here for the last 2 years. Nobody's been buying the highs. The only way that buying actually occurs at higher prices is when it's forced up there through short covering. So when we do have some type of a dip, which gets too many people too short on the wrong side of the market, and then they get forced out at gunpoint, this is where we get to be higher prices for the S&P. And you can see how this has worked all the way along here. Every time we've had a significant sell-off here, the dips have been bought and it's pushed the price up to higher levels. So a couple of things to keep in mind as we go through the next week. So not only do we have the FOMC tomorrow, which is about as minimized as I've ever seen an FOMC meeting. So tomorrow we get the latest policy release, but nobody cares because not only do we have to have another jobs report, which is coming out this Friday, but also another jobs report in December before they can even think about raising rates. So while we wait on that, from a technical perspective, now what we can do is we can kind of box things in here and understand what the battle lines are. So the battle lines are really this descending trend line here that's setting up. And I believe that if we end up breaking above here, that it's going to be one more time where it's going to be unable to make new highs. So any break to the upside, I think, is going to be stunted and might end up setting up a lower high up here, which could easily be sold into, and that, I believe, would punch through this level. So what you always have to watch out for is a significant lower high that sets up at a larger time frame, which is what this would be. This would be a weekly lower high, and this would ultimately, I believe, lead to more selling. Honestly, do you think that there's going to be more or less uncertainty after Tuesday's result? I think after next Tuesday's result, there's going to be a lot more uncertainty, regardless of who wins. This is not going to calm down easily. It's the same thing that occurs when we have a big event coming into the market. It takes it months to settle down. It takes it months to settle down and get into more of a linear pattern again. So to me, I think the battle lines right now are going to be still this level here. If this level holds, then I believe the prices will stay above that, obviously, right? But if it breaks, then we could be setting up for a retest of the Brexit low, which I think is going to frighten a lot of people, even though I think this may be necessary for the market to loosen up and trade again. So as long as this level holds, I think we're going to be still stuck with this type of price action, unless it breaks above here, sets up a lower high, and then punches through here again. So there's a couple of ways that this can go from here. So just a quick word here on the Fed to finish up today's report is that right now, as of tomorrow, that there's a 93% chance that the Fed's not going to do anything. Really, the risk is more in terms of the language of what they could say. And I really don't anticipate them doing anything or changing anything. They're not going to rock the boat. They do not want to call attention to themselves, especially in light of recent allegations about the Fed. So they're going to play it under the radar. I believe they'll do nothing at all to change anything to do with policy or any expectations. So what that does, though, is that seriously puts into light the December meeting. Now, this has gone as high as 75% recently after the recent GDP number came out at 2.9%, although now we're starting to see people question the actual integrity of that number. So now we've slipped that back to 64%, which is still a pretty high probability. So chances are still pretty good right now. But this will depend in a huge manner on what occurs Friday morning, of course, with the next jobs report, and then more importantly, what the jobs report reads literally days before the next meeting, which is going to be 14 December. So we'll have a next jobs read not only this Friday, but also another one in early December before we get 2 weeks later into the actual FOMC meeting with the full conference afterwards. Okay, so that's it for today's report. Thanks for listening, folks. Go Tribe, and we'll see you tomorrow.